4% right now. Google about 3%, but Dell, Intel, Research Motion, and Microsoft are all to the upside. Look how strong.
Did not disappoint. 400 points higher. Yes, indeed. The markets roar higher last 30 minutes of trading as volatility once again rules the day.
Most of the techs this morning, if not all of them, down 1.7% here, a loss of 37 points or so. Apple shares are just getting hammered this morning.
We're down by between 3 and 4.5% generally across these markets. Let's talk about the speed with which we are watching this market deteriorate. We're red everywhere, essentially, down by 4-5%.
We're down over 16%. Dow at the same time has fallen about 18%.
The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
Two-year no yields went from 190 to 166 in the blink of an eye.
On the NASDAQ, everything and more has been completely wiped out.
It was the worst day on Wall Street since the crash of 1987.
From the financial capital of the world, the opening bell is going to ring.
2001 stock market crash. Hi everyone. Welcome back to our channel where we explore some of the most significant events in financial history. Today, we are going to talk about the 2001 stock market crash. The year was 2001 and the world was recovering from the dot-com bubble burst. The stock market was still recovering, but investors were starting to feel optimistic again. However, all of that changed on 11th September when terrorists attacked the World Trade Center and the Pentagon. The attacks sent shockwaves through the global financial markets, and investors started selling off stocks in droves. In just one day, the Dow Jones Industrial Average lost over 684 points, or 7.1% of its value. The Nasdaq, which was still recovering from the dot-com bubble, lost even more, falling over 14% in just one day. The stock market crash of 2001 was a direct result of the 9/11 attacks, but it also highlighted some of the deeper economic problems that had been brewing for years. The dot-com bubble had burst, and many technology companies that had been riding high just a few years before were now struggling to survive. The stock market crash of 2001 was a difficult time for investors, but it was also a turning point for the global economy. In the years that followed, the stock market slowly started to recover, and new industries, like renewable energy and biotechnology, started to emerge. The 2001 stock market crash was a reminder of how quickly things can change in the financial world, and how important it is to be prepared for anything. But it was also a time of hope and renewal, as new industries emerged and the stock market slowly started to recover. In this video we discuss these topics. The state of the stock market before the crash. The 9/11 attacks and their impact on the stock market. The stock market crash of 2001 and its causes. The aftermath of the crash and the recovery of the stock market. The importance of being prepared for unexpected events in the financial world. The emergence of new industries after the crash. So, we covered 6 topics in total. So let's start with first topic is the state of the stock market before the crash in 2001. Before the 2001 stock market crash, the world was recovering from the dot-com bubble burst. The stock market was still in a state of recovery, but investors were starting to feel optimistic again. The dot-com boom of the late 1990s had created a lot of excitement in the stock market, with many technology companies experiencing rapid growth and high valuations. However, when the dot-com bubble burst in 2000, many of these companies went bust, leading to a sharp decline in the stock market. Despite this, the market was slowly starting to recover before the 9/11 attacks triggered the 2001 stock market crash. Second topic is the 9/11 attacks and their impact on the stock market. On 11th September 2001, the world was forever changed by the terrorist attacks on the World Trade Center and the Pentagon. The attacks sent shockwaves through the global financial markets, and investors started selling off stocks in droves. In just one day, The Dow Jones Industrial Average lost over 684 points, or 7.1% of its value. The Nasdaq, which was still recovering from the dot-com bubble, lost even more, falling over 14% in just one day. The stock market crash of 2001 was a direct result of the 9/11 attacks, and it had a profound impact on the global economy. The attacks created a sense of uncertainty and fear, and investors were quick to sell their stocks in an effort to protect their investments. The rapid selling caused stock prices to plummet, and the stock market experienced one of its biggest one-day losses in history. The 9/11 attacks were a turning point for the stock market, and they had a lasting impact on the global economy. In this video, we discuss about the 2001 stock market crash. The stock market crash and its causes can be discussed as follows. The stock market crash of 2001 was a difficult time for investors, but it also highlighted some of the deeper economic problems that had been brewing for years. The dot-com bubble had burst, and many technology companies that had been riding high just a few years before were now struggling to survive. The 9/11 attacks were the trigger for the 2001 stock market crash, but they were not the only cause. The rapid selling of stocks that followed the attacks was a result of the underlying economic problems that had been present for some time. The dot-com bubble had created a lot of excitement in the stock market, but when it burst, many technology companies went bust, leading to a decline in the stock market. The stock market crash of 2001 was also caused by the recession that followed the dot-com bubble. The recession led to a decrease in consumer spending, which in turn had a negative impact on the stock market. The crash was a result of a combination of factors, including the dot-com bubble, the 9/11 attacks, and the recession. In this point, we discuss on the 2001 stock market crash. The aftermath and recovery of the stock market can be discussed as follows. The aftermath of the 2001 stock market crash was a difficult time for investors, but it also marked the beginning of a new era for the stock market. The market took several years to recover, but by the mid-2000s, it was once again on the rise. The Federal Reserve played a key role in the recovery of the stock market by lowering interest rates and providing support to the economy. The government also introduced several measures to boost consumer confidence and encourage spending, which helped to stimulate economic growth. The recovery of the stock market was also driven by new industries, such as the rise of the digital economy and the growth of the smartphone market. Companies in these industries experienced rapid growth and high valuations, which helped to bring investors back to the stock market. In this video, we discuss on the 2001 stock market crash, the importance of being prepared for unexpected events in the financial world can be discussed as follows. The 2001 stock market crash serves as an important reminder of the importance of being prepared for unexpected events in the financial world. The 9/11 attacks were a shock to the global financial markets, and they demonstrated just how quickly things can change. It's important to have a well-diversified portfolio and not to put all your eggs in one basket. By investing in a variety of industries and stocks, you can minimize the risk of losing a lot of money in the event of a market crash. It's also important to have an emergency fund that you can access in the event of a financial crisis. Having cash on hand can help you weather the storm and avoid having to sell off stocks at a loss. Finally, it's important to stay informed about the latest developments in the financial world and to be prepared for unexpected events. This means keeping up with the latest news and trends and being prepared to make changes to your portfolio if necessary. In this last topic, we discuss on the 2001 stock market crash. The emergence of new industries after the crash can be discussed as follows. The 2001 stock market crash may have been a difficult time for investors, but it also marked the beginning of a new era for the stock market. In the aftermath of the crash, new industries emerged that would come to shape the financial world in the years to come. One of the most significant new industries to emerge after the 2001 crash was the digital economy. Companies like Amazon, Google, and Facebook were just getting started, and they would go on to become some of the largest and most valuable companies in the world. The smartphone market also emerged as a new industry after the 2001 crash. Companies like Apple, Samsung, and Huawei brought new innovations to the market, and the smartphone became an essential tool for millions of people around the world. Another industry that emerged after the 2001 crash was the renewable energy sector. Companies like Tesla, SolarCity, and First Solar were founded in the aftermath of the crash, and they would go on to play a major role in shaping the future of the energy industry. This is just a brief overview of the new industries that emerged after the 2001 stock market crash. Stay tuned for more content on how these industries have transformed the financial world. Thanks guys for watching my videos. If you like this video, please like, share and subscribe my channel.